Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, we are advancing again today after that record-breaking performance for the Dow Jones Industrial Average last night, closing at 14,253, an all-time high, and it's 68.5% higher than it was when it troughed just after the collapse of Lehman Brothers in October of 2008. It's been an astonishing recovery for U.S. equities, and in fact, over the past 4 years, U.S. equities gained back about $10 trillion worth of value, much of it, of course, lost at the peak of the credit crisis. Asia markets, of course, advanced as you might have expected after the record close in New York yesterday. We saw 2.5-year highs for some of the major indices, and we saw the broader Topix index in Japan, probably a better reading of equity performance in what has to be remembered is the third largest economy in the world, go past 1,000 for the first time since October 2008 as well. So those dates do loom large around equity performance benchmarks all over the world. Here in Europe, we're seeing a good advance both in Europe and indeed here in the United Kingdom. The FTSE Euro First 300, probably the best reading of blue chip performance over on the continent, is at a 4.5-year high, and we're advancing closer to 5-year highs here on the FTSE 100. Again, central bank support is probably one of the biggest drivers of that, but there's a decent amount of quality earnings underneath it, and equity valuations are still probably cheaper now than they were after, or just before, I should say, the collapse of Lehman Brothers in 2008. So the market does seem to like what it sees, and it does suggest that there might be more legs in this bull run. Now, one of the interesting stories from a single equity perspective today is Vodafone. It's one of the most heavily weighted stocks on the benchmark FTSE 100, and today it soared nearly 5%. Actually popped over that for a little bit, but gained or tracked back shortly after. There's an interesting story first reported on Bloomberg. It's being matched by some of the other media outlets suggesting that Vodafone and Verizon are in advanced talks that might actually put an end or somehow come up with a solution for the joint venture stake in Verizon Wireless that Vodafone has had for many, many years, but has been unable to, well, effectively capitalize on. If the reports are to be believed, Verizon might be preparing to buy out Vodafone's 45% stake in the biggest wireless carrier in the United States. It would be a deal worth around $115 billion US for Vodafone, and would finally placate shareholders who have been urging for a solution for many, many years to, well, what has been kind of an expensive yet not really profitable in terms of ongoing performance asset for Vodafone, again, over the past years. Now, what's interesting from two perspectives is this. Firstly, $115 billion is about the size of the cash pile that sits inside Apple's books right now, and of course is part of shareholder litigation. And secondarily, if some of that $115 billion would be repatriated back to the United Kingdom, it would be an enormous boost to the Treasury. Lots to talk about in that story, and do follow it, please, on the economy page here at the IB Times UK. And we'll see you tomorrow.